la siguiente presentación es sobre tendencias y rentabilidades de la industria de fondos de capital privado en LATAM. Para ColCapital es un honor contar con la participación de Preqin en nuestro evento. Para la asociación es muy relevante el trabajo que se está realizando en conjunto con Preqin para darle visibilidad a los gestores de la industria local. Así que llamo al escenario a Jesse Fay, Vice President de Preqin. Adelante, acá lo esperamos en el escenario.
Gracias, Paula. Buenos días, todos. Forgive me. I think this will probably be the only presentation today that will be in English. My command of the Spanish language is very poor, and that's generous, so rather than make you all suffer through that for 30 minutes, we'll do it in English, and hopefully we can speak later if anyone has any further questions. As Paula said, my name is Jesse Fay. I serve as the Vice President of Private Capital for Preqin, and today I'm going to speak with you all, giving an overview of the private equity market globally, as well as focusing on Latin American private equity. For anyone who's not aware of Preqin, we're the largest data provider for alternative assets globally, covering every asset class from a fundraising, performance, deals, and LP activity perspective. And today, as I said, I'll be giving a private equity overview, looking first at some trends in fundraising and AUM, followed by some performance and a quick deal maker roundup. And then lastly, we'll be looking at a 2020 outlook, what's going on in the market, and what do we see happening this year and over the next 3 to 5 years. Okay, so starting off, private capital, AUM, and fundraising, some key market trends. So I think we'd be remiss not to first look at AUM across the industry. Just to be clear, this is private capital globally. And as you can see here, AUM's absolutely exploded over the last decade. From back in the end of 2010, we had just under $3 trillion in assets globally in private capital. Then as at the end of H1 of last year, which is the latest we have data for, we were just under the $7 trillion mark. So more than 2.5 time growth in assets under management. And then if we look at that by different asset classes, it's really proportionally spread out, with every asset class at least doubling over the course of the last 10 years. So really just tremendous growth. And that tremendous growth has been fueled, of course, by very strong fundraising. The last 3 years, we managed to eclipse the $1 trillion mark for single-year fundraising globally. The majority of this was taken up from private equity, which managed to raise over $600 billion each of the last 3 years. But I think now that we've crossed the $1 trillion mark, things have begun to slow a bit. I think there's a variety of factors where we're at in the current market. Then also, just can we keep this tremendous growth going literally as it has been? So it'll be interesting to see kind of going forward if we'll continue to hover around the $1 trillion mark, or if we're able to continue to grow and keep raising more capital. And then another thing that's really been fueling this growth is private equity, or private capital in general, has been very kind to their investors. This is a chart showing capital calls and distributions and net cash flow to LPs historically. And as you can see, for most of this decade, especially over the mid-decade, net cash flow for LPs has been positive. So they've been happy with their private capital investments. They've been very lucrative for them, and they've been willing to put that capital back to work with subsequent fundraisers. However, this capital distributions cash flow has been slowing slightly. We can see the last year, or in 2018, net cash flow was negative for the first time since 2012. And though we don't have end-year data yet for 2019, it looks like it might be even, if not a little bit negative again as well. So especially as we're kind of plateauing with fundraising at $1 trillion, will we continue to hit new highs if net cash flow is suddenly turning negative for these investors? And then looking just specifically at PE, as I said before, that's been the lion's share of private capital's growth. bringing in just over $600 billion in fundraises over the last few years. And the majority of this has been coming from North America, specifically the US, which just about every year the past decade has brought in 50% of all capital raised. However, and 2020 is off to a great start here as well. So it's really very strong here. Asia and Europe have been somewhat inconsistent in terms of the amount of capital they brought in, but really strong growth from private equity overall. However, cash flow for private equity specifically has been even a little weaker than private capital in general. While the entire decade has been very strong, positive just about every single year, it's looking now like the last 3 years in a row might be negative net cash flow distributions from GPs to LPs. So there's even less money coming back to these private equity investors, and LPs might need to reevaluate whether they can keep on investing in these larger fund sizes, especially as less cash actually reaches their pockets. And looking at LATAM fundraising specifically for private equity, it's been a bit of an uneven decade, some very strong years such as 2011 and 2014, but the last couple years at least, it's been seeming to slow a bit. 2019 was actually the worst year on record for a decade for private equity fundraising. This is both by number of funds closed as well as aggregate capital raised. So it's a little bit of a sign of caution there. However, it could just be that there's more capital coming down the road. Looking at the funds in market right now for LATAM-focused funds, there's actually just under $22 billion targeted by funds currently in market, including 2 very large $5 billion funds from SoftBank as well as Colony Capital. So if even just one of these manages to close on their targeted fundraise, then it would be a very strong year and could be well on its way to a banner year for Latin American fundraising overall. As for where this Latin American fundraising is coming from, I think one issue that's keeping overall numbers low is that there's very little foreign investment outside the US. We look at this is total fundraising over the decade, broken out by the origin of the GP's country. Brazil's leading the way and US is right behind it. However, outside that, all these countries are all Latin American. Outside of the UAE, raised a few funds just under $1 billion, and some minimal interest from Europe and Asia. So I think one key to unlocking the Latin American private equity market is getting more attraction and appeal from some of these other geographies rather than just the domestic growth, which has been strong, but hasn't been keeping up with some other regions. And then in terms of what funds are actually closing for Latin American focused funds, buyout and growth are far and away the biggest recipients of capital for these different funds. However, I think one thing to note here is that venture capital, and specifically early stage venture capital, has becoming more and more prominent. Last year, VC funds actually raised over $1 billion over the first time we've seen, and that was led by early stage VC. So it could be signs that the startup market in Latin America is growing, and there's definitely more capital being poured to some of these startups that are coming from the region. Okay, so we've looked at some AUM and some fundraising trends for the region, but how about performance? How have these funds actually been doing, especially through this very strange bull market that we've been seeing for the last 10 years? And also take a look at some deal activity. So before we look at just pure returns, let's look at what are institutional investors actually looking to get out of their private equity and private capital investments. Don't worry, I'll break this out to just private equity, but we asked some of our LP clients what are they looking for outside of just pure returns. The one thing they all agreed upon is diversification for all private capital, which alternative assets is to be expected. But really, depending on which asset class they invest in, they're looking for different things from those investments. Private equity specifically, while there are different things driving it, returns is the #1 driver for investments to this region or to this asset class, both absolute returns and risk-adjusted returns. And I think for the most part, private equity has delivered on this, or especially in the absolute return criteria. This is looking at the different private capital asset classes and looking at a risk-return portfolio from vintages 07 to 2016. The bubble size means how large. Private equity is obviously the largest, but private equity, if you're willing to take the risk, because it is the riskiest of the different private capital asset classes, it has rewarded investors quite a bit with a median IRR of 15% for these vintages, so quite strong. And really, looking at just private equity, most strategies have been performing very well. Buyout and growth particularly have been very strong, looking at different horizon IRRs. Depending on when you're looking, private equity's either been even or outperformed the larger S&P 500 through this bull market, which is such a unique investment option. I think it's pretty noteworthy. Obviously, as we've seen in the last few years or last few weeks, public equity markets are very volatile right now. Everyone's looking for a potential black swan event, which could really harm your returns if you're not properly diversified. So I think private equity is especially going to be a big beneficiary of this as a safe haven where you won't be subject to day-over-day volatility for something like coronavirus or some geopolitical issues. And then if you do careful manager selection, private equity really has the opportunity to outperform compared to some of their peers. Median IRR for private equity strategies for most vintages this decade have been right on 15%, which on its own is very strong. But if you select some of the top quartile managers, you're earning easily 20, 25%. So showing, well, as a whole, private equity is a strong performer, and there's some managers out there who are really able to outperform the market and really reward their LP investors. And then within the different private equity strategies, one thing unique about this past decade to the early 2000s is there's been a lot more parity in terms of returns over different strategies. The 2000s, really buyout and growth were the strategies to have. Everything else was kind of all over the place. Venture capital, you weren't sure what you're going to be getting. But this past decade, everything has been very strong, between 10 15% year over year. And different strategies, depending on the vintage, have outperformed others. So private equity is a much more balanced asset class now than it was just 10 years ago. And depending on what your needs are and when your risk appetite is, there's a strategy for you. Although that being said, buyout, growth, and VC are still by far the most sought after. With LPs we've spoken to, 65% say they're looking to invest in buyout in the next 12 months, being 2020. And just about 50% said they're looking to have a general venture capital fund in their portfolio or add a growth equity fund. So these are definitely the biggest strategies, and based off past performance, I think it makes sense why they are. And then just quickly looking at the deals that are actually powering this. I think this is an interesting chart looking at buyout deal activity for the last 15 years. The decade, as with fundraising, has been relatively strong and going up and up and up. However, for the first time in 3 years, deal activity actually dropped from the upward trend it was. The only thing that didn't drop in terms of buyout deals was the average deal size. I think that's an interesting number, $473 billion average deal size here, because the last time we hit that was actually 2007. I'm not one to believe in chart indicators for where the market's heading. However, with this being the longest recovery on record and really late in the kind of current cycle, it's interesting to see that we're matched up again with where we were in 2007 and wondering what does this mean for deals going forward the next few years. And then exits as well. It's taken a slight dip from last year and is really down heavily from where it was in the middle of the decade. I think that this is a big reason why net distributions has fallen negative for the last few years. And if exits don't continue to rise up, it'll be hard for private equity funds to continue to outperform and LPs to continue to invest towards this asset class. Venture capital as well, a sharp dip from the year before. However, I think that's more because 2018 was such an amazing year for investments. 2019, while not as great, still very, very strong overall. $213 billion aggregate value is the second largest we've ever seen. So VC deal activity is very high and seems to be going strong. Similar to buyout, average deal size has continued to tick upwards. So it's a common concern amongst the industry. Valuations are very high, and are these premiums worth it for what we need to pay for some of these assets? And then exits as well, a very strong year and an even sharper drop in exits overall. I think you would like to see this continue to go up and be high, especially with all the venture capital investments that have been happening. But it'll be interesting to see, will managers be seeking exits or will they hold on to these later maybe do some buy and build strategies while they don't want to kind of do an exit in this tough environment. Okay, so we've taken a look at some performance, some fundraising, and some deal activity across the industry. The last thing is, what's the future outlook here? What are LPs actually looking for, and what can we expect from private equity? I think for the most part, what we can expect is some pretty strong continued performance, at least from a fundraising standpoint. This chart's looking at long-term investments towards private equity, and you can see pretty much year over year, right around 50% or above of all LPs are looking to increase their allocations to private equity in the longer term. So it's absolutely a big strategy for institutional investors, and one that should continue to see increased investment. And that's even more prevalent now because this is a chart looking at LP location and activity in '08 versus now. As you can see, we're tracking at Preqin over 1,100 institutional investors in alternative assets. And the heat map, I think, is especially helpful because you can see back in '08, it was really a US and European dominated market, at least from LP standpoint. Now it's absolutely a global market. Every continent has a significant LP presence for their investments. So we have more LPs looking to invest more in private equity and more LPs than we had ever before. So at least from a capital raising standpoint, this should be very good news for the asset class. And then LPs in LATAM specifically have strong exposure to alternatives, especially compared to some other emerging markets, with a median exposure to alternatives about 3.1%, so relatively high, especially for emerging markets. And then LPs in general are looking to invest more towards emerging markets as a whole. I think 2019 2020 is a bit interesting. In 2020, more LPs are saying that they are not investing in emerging. However, the ones that are looking to invest in emerging markets are looking to invest more of their portfolio towards emerging markets. So while it's definitely not for everybody, the ones who do have an appetite for emerging markets are looking to put more and more of their capital there. And I think overall should be a boon for LATAM and some other emerging markets. And then as to what countries present the best opportunities in emerging markets, it's no surprise that Asia has been the primary beneficiary of this, especially recently. The population growth over there has just been so explosive that it makes sense that a lot of capital will be flowing to that region. However, South America is still a very significant part of investment strategies for fund managers and LPs looking to allocate to fund managers. So it's definitely a big part of emerging market strategies. And I think with Asia, as things begin to plateau a bit, like I said, there's not much global investment in LATAM now. If that's able to change, these numbers should keep continuing to rise and more opportunities should be able to come for this region. And then managers who have been receiving all this incredible fundraising and AUM up and up, obviously they're looking to put that to work with over half of all managers saying they're looking to deploy more, if not significantly more capital than they did in the last 12 months. So there's more capital than ever, and managers are looking to invest it heavily in their respective asset classes and industries. So it's a crowded fundraising market. So what can you do to try to stand out in this market? One thing that's pretty important to LPs and growing importance to LPs at least is having more routes to market and offering more opportunities for LPs to invest. LPs becoming significantly more sophisticated as years have gone on. And one thing they're looking for is more control in the form of separate accounts and co-investments. For the most part, managers have been receptive to this. It's still not quite the norm, but I think it's something that we'll see exceedingly more of, and that managers will have to do in order to bring in larger LPs. And for the most part, managers believe that the pros of co-investments outweigh the cons. There's more capital to work with and improve your relations. It might slow down deal process a little bit overall, but at the end of the day, if you're still getting the deal done and your investors are happy, it's probably an overall win. And then if you want larger LPs especially, then you're going to have to really be looking to some of these alternative routes to market. Large LPs are demanding these days separate accounts and co-investments. So if you're looking at some big pension funds, this is something you'll definitely need to look into and most likely offer if you want them to finally sign. In terms of some fears for 2020, I already mentioned asset valuations is the number one thing in everyone's mind, and kind of a trickle on of that is the exit environment and competition for assets. But I think we did this at the end of last year. Geopolitical landscape was a pretty high concern. I think if we did that same survey today, it'd be even higher. I think, as I said, people are looking for a black swan event, just waiting for the other shoe to drop in terms of the current cycle. So it's definitely something people are concerned about, and we'll be looking for a strategy that's able to hedge this risk appropriately. And then while the majority don't like the current valuations, there's no consensus on where we are with the current market. Many believe that the correction is coming within the next year or even sooner. However, there's also people who believe that it's fairly valued or more than a year away. So there's really no consensus on where we are with the current market. Just looking again, private equity as an immediate plans, next 12 months for 2020 and longer term plans. 41% of LPs are looking to invest more this year, and over half of LPs are looking to invest more in the longer 5-year plans. So a lot more capital stream flowing to this industry. And then more LPs are coming from emerging markets than previously. So this is looking for LPs capital flowing to alternatives. As you can see with Latin America, right on 25% of people we spoke with expected LP capital towards alternatives is expected to increase for Latin America. So we also expect many more LPs globally to enter Latin America, with 20% saying they're not currently invested, but they're planning to invest in the near future. And then 9% saying that they are currently invested or looking to increase their investment. So about 30% of LPs we're speaking with are looking to drive more capital towards Latin America. And then many fund managers are also seeing Latin America as a great opportunity for them to invest, with right around 15% of fund managers believing that Latin America is one of the best investment opportunities for them currently, and 25% believing that by 2023 it will be the best opportunity for them to invest in. So Latin America is definitely on the up, at least in terms of both investor and fund manager perspective. And then for fund managers looking to target emerging markets by 2023, as you can see, 57% say looking to maintain their investment, and a whopping 39% say looking to increase their investments to LATAM. So really across the board, more capital seems to be coming to this region. So summary, sorry if this went on a little bit longer than intended, but quick summary here. Private capital AUM is at record highs, including private equity AUM, more than double over the last decade. But it's interesting to see we'll be able to keep this momentum going. There's some signs of weakening in fundraising. A lot of this is due to some net negative cash flows to LPs. So GPs ought to continue to perform and pay out cash to their LPs in order to keep raising these larger funds. Private equity overall has delivered consistent net returns to LPs throughout the cycle. It's a bit more of a risky strategy compared to some other alternative assets, but if you're willing to accept that risk, it really has the opportunity to shine. Private equity remains a large part of LPs' both short and long-term plans, so there should be more capital flowing, at least from current investor sentiment. And then LPs are becoming more sophisticated, so if you want to attract this capital that seems to be flowing and continue to flow, you'll need to really improve your offerings and really work with LPs and kind of make more concessions as to what they want in terms of control, transparency, in order to sign them. So that's my presentation here for the overview of private equity. Thank you all very much for staying through this. I don't believe we have time for questions, but if anyone wants to grab me for the coffee, I'd be happy to go over any of this with you. Thank you.
Thank you very much. Y ahora, queridos asistentes, los invito a ver el siguiente video.
Nos acostumbramos a desconfiar antes de conocer, a cerrar ventanas, puertas, incluso mentes y corazones. ¿Será normal que el colombiano sienta desconfianza? ¿Por qué? Si la confianza nos impulsa, nos hace más fuertes, es lo que nos motiva a tomar decisiones que nos hacen avanzar. La confianza fue eso que un día te dio a ti la certeza de que podías lograrlo, que podías renunciar a todo para vivir de lo que te apasiona. Y después nos dio a nosotros la convicción de que podíamos transformar una ciudad entera. La confianza es la base más sólida para crecer, y no en tamaño, sino en visión. Porque en nuestro caso nos da la libertad de ver proyectos convertidos en comunidades. Pero a ti te hará ver hechos donde solo tenías planes. La confianza nos ha hecho sembrar progreso donde nadie veía esperanza. Nos ha hecho levantar ciudades dentro de ciudades. Y con ello, el futuro de nuestro país. Alguien dijo alguna vez que la confianza es la base de todo. Por eso la convertimos en el cimiento de nuestra misión, en esa pieza que nunca más le hará falta a nuestro país, porque nos comprometimos a construirla.
Muy bien, queridos asistentes, les quiero recordar varios puntos muy cortos, muy exactos. El primero es que el programa detallado del evento y las biografías de los panelistas los podrán descargar por medio de un código QR que tienen justo detrás de sus escarapelas. También pedirles mucha puntualidad con nuestros horarios porque tenemos una agenda muy interesante, nutrida, pero queremos respetar el tiempo de ustedes y de nuestros expositores. Así que vamos a cortar 10 minutos donde los invitamos a tomar un refrigerio, el primer coffee break del día, y en 10 minutos exactos iniciamos. Muchísimas gracias por su comprensión y en 10 minutos nos vemos acá.
Nos acostumbramos a desconfiar antes de conocer, a cerrar ventanas, puertas, incluso mentes y corazones. ¿Será normal que el colombiano sienta desconfianza? ¿Por qué? Si la confianza nos impulsa, nos hace más fuertes, es lo que nos motiva a tomar decisiones que nos hacen avanzar. La confianza fue eso que un día te dio a ti la certeza de que podías lograrlo, que podías renunciar a todo para vivir de lo que te apasiona. Y después nos dio a nosotros la convicción de que podíamos transformar una ciudad entera. La confianza es la base más sólida para crecer, y no en tamaño, sino en visión. Porque en nuestro caso nos da la libertad de ver proyectos convertidos en comunidades. Pero a ti te hará ver hechos donde solo tenías planes. La confianza nos ha hecho sembrar progreso donde nadie veía esperanza. Nos ha hecho levantar ciudades dentro de ciudades. Y con ello, el futuro de nuestro país. Alguien dijo alguna vez que la confianza es la base de todo. Por eso la convertimos en el cimiento de nuestra misión, en esa pieza que nunca más le hará falta a nuestro país, porque nos comprometimos a construirla.